Welcome to the Deep Dive, powered by Talk Tickers. Today, we are really cutting through the noise, delivering the essential insights from EXP World Holdings' second quarter 2025 earnings call.
Yep.
Our mission for you is pretty simple. Get the vital facts, the key figures, and the strategic takeaways without wading through hours and hours of transcripts.
Exactly. We aim to equip you with a, let's say, concise yet comprehensive understanding of the company's recent performance, its evolving strategic direction, and maybe what these developments signify for the broader market.
Right.
We'll synthesize the full discussion, highlight what truly matters, and take a look at the market's immediate reaction to.
So let's jump straight into the headlines then. EXP World Holdings reported second quarter revenue of $1.31 billion.
Mm-hmm.
Now, that was actually a slight beat against consensus estimates and represented a 1% year-over-year increase. On the surface, a pretty solid top-line performance in what's, let's admit it, a challenging real estate environment.
It was, yeah. However, the GAAP EPS came in at a loss of $0.01 per share. That notably missed the consensus expectation of a $0.09 gain.
Oof.
Yeah, that's a significant miss on the bottom line. That's certainly caught some attention. Despite this, adjusted EBITDA remained positive at $11.2 million.
Okay.
And the company ended the quarter with a solid $94.6 million in cash. They also maintained their quarterly dividend at 0.05 cents per share and returned a substantial $32.6 million to shareholders.
Yeah.
That was through a combination of buybacks and dividends.
Now, despite that GAAP EPS miss, the stock actually saw a quick positive pop right after the call. That's not what you typically expect from a headline loss, right?
No, not at all.
What do you think this immediate market reaction is truly telling us about how investors are evaluating companies like APXP in this market environment?
Well, what's fascinating here is that for a company like APXP, which is still very much in a growth and market share capture phase, investors appear to be prioritizing the strategic narrative and the future operational leverage over, let's say, immediate GAAP profitability.
Yeah.
This reaction isn't just a quirk. It's a telling sign of maybe patience, suggesting a belief in where the company is headed, not just where it stands today.
Oh, okay.
It implies that the market is willing to look past short-term dips if the long-term growth story, particularly around agent productivity and international expansion, holds strong.
That's a crucial nuance. So let's unpack that deeper narrative. The earnings call provided a wealth of detail on agent dynamics, strategic initiatives, and the company's outlook for the future. Where did they begin to paint this long-term picture?
Indeed. They started with agent performance, which is really foundational to their model. The company reported its first sequential quarter-over-quarter growth in agent count since Q2 2024, reaching 82,704 agents globally.
Okay, so a turnaround there.
Yeah, this is a significant data point, signaling a potential turning point in agent attraction. Management emphasized a deliberate shift towards attracting and retaining more productive agents. That's key.
Productive agents, right.
They highlighted a 4% year-over-year increase in sales transactions per agent, and interestingly, a 9% rise in icon agents. Those are the top performers who hit specific production and cultural contribution milestones within EXP's unique model.
That sounds like a powerful shift from just pure growth to quality growth. But what's even more interesting is how they're achieving that. You mentioned attracting teams.
Precisely. A particularly significant detail, I thought, was that 41% of new agents joining EXP in Q2 were members of teams. And these teams are, get this, 79% more productive than individual agents.
Wow, 79%.
Yeah. This isn't accidental. It speaks to ET's value proposition really resonating with established high-performing groups. They also continue to shed less productive agents, with 57% of those leaving the company also exiting the industry entirely, which suggests a healthier, more efficient, and ultimately higher quality agent base overall.
So this isn't just about adding bodies. It's about optimizing the talent pool, basically. What does this deep focus on productive agents mean for their overall value proposition to, real estate professionals?
It means their agent-first cloud brokerage model is gaining significant traction and proving incredibly resilient, even in this challenging market.
Right.
Management highlighted the strong reception to new programs like the co-sponsor program, which has facilitated collaborations across 22 countries. That demonstrates truly global agent engagement.
22 countries, okay.
They also rolled out their CRM customer relationship management of choice program, This offers agents powerful tools like Bold Trail, Close, or Lofty, allowing them to pick the platform that best fits their specific needs rather than just a one-size-fits-all solution.
Flexibility, yeah.
And for those interested in specialized markets, the launch of EXPI Land and Ranch, that niche offering, has already seen over 100 agents join since April, with strong demand for more. These are all about empowering the agent to be more efficient and successful.
It sounds like these agent programs and the attraction of productive agents are really core to their model. How much of that agent empowerment and indeed EXP's broader strategic direction is being fueled by their significant investments in technology, especially AI?
Oh, it's a huge driver.
Yeah.
They're making substantial investments, particularly in AI and automation. They're not just, subscribing to leading platforms like OpenAI and Slack. They're leveraging them as strategic tools to boost productivity and scale across their entire operation.
So integrated tools.
Exactly. Internally, AI applications are now writing about 50% of their code. 50%. That significantly accelerates development cycles while maintaining quality.
Huge.
Imagine the competitive edge of having development times. It allows them to iterate faster, bring new tools to agents quicker, and ultimately maybe outpace traditional brokerages.
Yeah.
The co-sponsor program, which we just discussed. It's now almost fully automated, showcasing practical AI application right there. The clear focus is on using AI to empower agents, drive faster response times for client inquiries, provide better support, and ultimately increase sales and overall productivity for the entire network.
One area that consistently draws attention for AXP is their, aggressive international expansion. What were the key developments or maybe ambitious targets they highlighted in the call on that front?
Absolutely. The international segment saw robust 59% year-over-year revenue growth.
Wow, 59%.
Which is truly impressive given the global market. They successfully launched operations in Peru and Turkey in Q1 and Ecuador in Q2. And all three markets experienced record starts in agent onboarding and, crucially, immediate transaction flow.
So they hit the ground running.
Yeah. This rapid production indicates a well-executed launch playbook. Their long-term goal is incredibly ambitious. 50,000 agents across 50 countries by 2030.
50,000.
Currently, they have approximately 5,000 international agents, so there's significant runway for growth there. They've also implemented a 2-year minimum experience requirement for international agents, focusing on productive growth over sheer numbers, and they even hinted at planned entries into Japan and South Korea.
That's a bold vision. But let's pivot to the financials for a second. Specifically that GAAP gross margin, which saw a bit of a dip. What's the story there?
Right. The GAAP gross margin was 7.1%. That was down 40 basis points year over year. The CFO, Jesse Hill, attributed this predominantly to more productive agents reaching their commission caps.
The cap.
Exactly. That's when an agent, after hitting a certain earnings threshold, keeps 100% of their commission for the rest of the year. He actually emphasized this as a core differentiator of their model, something they welcome because it strongly enhances agent retention and, stickiness within the platform.
Okay, so it's a feature, not a bug in their eyes.
Pretty much. For the second half of 2025, they expect GAAP gross margins to remain in that low 7% range. However, they anticipate absolute gross profit dollars to grow through a mix shift to higher producing teams.
Right.
And they expect affiliate programs like EXPI Luxury and Land and Ranch to drive incremental margins over time as the macroeconomic environment hopefully improves. It's about growing the overall pie of profit dollars, even if the percentage shifts a bit due to agent success.
While the CFO welcomed the lower gross margin as a sign of agent success, for investors, does this model inherently cap their long-term profitability percentage, even as gross dollars grow?
Is there a point where this becomes a concern, you think?
That's a really perceptive question. While the percentage might fluctuate because of agent success, XP's model is built on massive scalability and, crucially, lower overhead compared to traditional brick-and-mortar brokerages.
The cloud model. Exactly. The focus on absolute gross profit dollars growing means that as they expand globally and add more productive agents, their overall profit pool should expand substantially. The affiliate programs like EXPI Luxury, those are designed to capture higher margin services as well. So while the gross margin percentage might seem low by, say, traditional standards, the operational leverage of their cloud-based model means those absolute dollars can contribute significantly to the bottom line as they scale further. It's just a different kind of profitability curve,
Okay, that makes sense. And what about the increased operating expenses that caught some attention too?
Right, adjusted operating costs were indeed up 20% this quarter. But it's important to note that approximately $6 million of that was due to one-time strategic investments and severance costs related to streamlining operations.
One-time costs. Okay.
Yeah, the company expects more efficient operations and more favorable operating expenses in the back half of the year as these actions take effect. So that suggests the potential for the expense curve to bend downwards moving forward, indicating better cost control and efficiency gains post-restructuring.
Finally, let's talk about the big picture strategic shift. Right at the very top of the company, with founder and CEO Glenn Sanford. This seems like a pretty significant pivot.
It truly is. Glenn Sanford announced a substantial shift in his personal focus. After primarily working on international expansion, which, by the way, is now being led effectively by Felix Brado, he is rejoining Success Enterprises as publisher and managing director.
Success Enterprises.
Also, yeah, this is a strategic move to lean deeply into the, $50 billion personal development industry. His aim is an AI-driven reinvention of Success Plus Quad. He envisions it as the Amazon Prime for personal development, offering AI personalized coaching, courses, and a vast digital content library.
Wow, Amazon Prime for personal development.
Big ambition. For agents within EXPI, Success Plus is already included for free and provides valuable resources, including a 16-lesson real estate training program by John Sheplack and new AI resources like Jim Ron integration. It represents a significant diversification of their strategic platforms and potentially a whole new revenue stream that leverages their existing agent base.
This all unfolds against a challenging backdrop in the U.S. housing market. How does this comprehensive picture of EXP World Holdings fit into the current industry environment, especially with elevated mortgage rates still impacting transactions?
Well, the U.S. housing market remains soft, no doubt. It's significantly influenced by those elevated mortgage rates, leading to a transactional downturn pretty much across the board. Brokerage peers are certainly facing margin pressure in this environment, as we've seen across the industry.
Yeah, definitely.
Despite this, EXP's storyline seems to be evolving, from being solely a hyper-growth disruptor to more of a scale efficiency operator.
Scale efficiency operator. I like that.
Yeah. And the market's initial positive reaction to the earnings call, like we discussed earlier, suggests investors are rewarding their forward-looking growth initiatives, particularly that aggressive international expansion and the deep focus on agent productivity and retention, even if it means a near-term profitability dip. It's kind of a vote of confidence in their ability to execute their unique asset-light model, even in tough times.
Okay, given all this, what are the immediate signals you would be watching for to track EXP's progress in the coming months? What should listeners keep an eye on?
Good question. Key catalysts in the near term, I'd say, include the September agent count update. That will show whether that sequential growth continues.
Right, critical number.
Absolutely. We also have the Q3 dividend payment coming up in August.
Yeah.
Keep a close eye on initial traction metrics for the Success Plus program, especially now that Glenn Sanford is leaning into it heavily.
Mm-hmm.
And any new M&A or joint venture announcements, particularly in the Asia-Pacific region, could be significant as they eye that big 2030 international goal. Looking further out, maybe an inflection point in housing rates, if that ever happens, or clear evidence of rising agent caps in the industry could provide significant upside. Conversely, of course, another EPS miss or, say, stalled international uptake could pressure the stock's multiple.
And finally, a question we often hear. How much does the EXP stock component actually play into their agent value proposition? Is it the main draw or more of a, bonus?
Yeah, management addressed this. They stated that while the stock component absolutely differentiates them and aligns agents with shareholder interest, giving them a piece of the company they help build, it's not the primary reason agents join or stay.
Interesting.
Most agents, they say, are drawn to the comprehensive value proposition.
Right.
The tools, the training, the community, the cloud-based model, that unique revenue share. They see the stock as a valuable but, fluctuating long-term incentive that kind of compounds the overall attraction rather than being the initial hook. Got it. All right, it's time for our signature segment. This is not financial advice. We're going to put on our speculative hats and pitch an outrageous but plausible trade idea based on everything we've just unpacked today. What have you got?
Okay, all right. Given the, let's call it, cautious optimism in the market reaction, the company's clear focus on attracting and retaining those highly productive agents, and those truly aggressive international expansion plans. Here's a thought for you.
Lay it on us.
Consider a long-dated, out-of-the-money call option on EXP World Holdings. the outrageous part. You're deliberately looking past the near-term housing market headwinds and those current low single-digit GAAP gross margins.
Ignoring the present, basically.
Exactly. Instead, you're betting on a multi-year hockey stick profit inflection. This would be driven by, say, those international joint ventures maturing and really starting to contribute significantly. Success plus successfully diversifying revenue streams, and maybe potential tailwinds from a future housing market recovery, or even an increase in agent taps that drive revenue share.
Okay, that's the outrageous part. What makes it plausible? The plausible lies in management's stated cost discipline, their demonstrated AI efficiency gains we talked about, and their proven ability to attract highly productive agents, even in this downturn. It's essentially a bet on the operational leverage of a truly global cloud-native brokerage model. You're playing the long game for a significant payoff as they scale into their ultimate vision.
A long-term leverage play. Got it. So you've just received a comprehensive deep dive into EXP World Holdings Q2 2025 earnings. We've covered their mixed financial results, the positive sequential agent growth, their aggressive international expansion, the strategic shift towards AI-driven personal development with Success Plus Re, and the market's, well, cautiously optimistic reaction.
Yeah, the company is clearly navigating a challenging real estate landscape by focusing intensely on productivity, innovation, and importantly, disciplined capital allocation. Their future performance will significantly hinge on the precise execution of these strategies, particularly as their international ventures mature and their AI investments translate into tangible bottom-line efficiencies.
We certainly hope this deep dive has given you a clearer, more informed perspective on EXP World Holdings. Now remember, the information presented here is for informational purposes only and is absolutely not financial advice.
Please do your own research.
We encourage you to always conduct your own thorough research. What stands out to you from this deep dive? What parts of XP's strategy do you think will be most impactful in the long run? We genuinely love to hear your thoughts. Until next time, stay well informed and keep digging deeper.